Trading runs in cycles. Some of it's good, some of it's bad. I can't understand this one. Doesn't make any sense. There's no rational reason for it, but it's really quite true. When you're on a hot streak, you're on a hot streak. And when you're on a cold streak, you're on a cold streak. When you're on a hot streak, even your errors work. When you're on a bad streak, it doesn't matter how good your thinking is, you're going to fail. It's just part of the business. When you're on a cold streak, reduce the size of your trading. Trade smaller and smaller and smaller and smaller and smaller and smaller and smaller until you start to get profitable again. And trade larger and larger and larger and larger and larger. Most of you won't do that. Most of you on a losing streak will increase the size of your bet. Don't do that. Stop that. Most of you won't. I know that. Keep your technical systems simple. Complexity breeds confusion. It's true. I have never met a Fibonacci number watcher. I've never met an Elliott wave watcher who does any good in this business because they get, oh, I love the Elliott wave people. Is this an A, B, and C minuet of a third move of a C force minuet califragic? No, it can't be. That can't be it. And they're either so confused as to what they're doing or they do nothing. The greatest traders I know, the Paul Joneses, the Rich Dennises, the Rocket Rick Barneses, for those of you who've been around a while and remember Rocket Rick, nobody could start with less money and turn it into more money faster than the Rocket could. They do the most simple and easy technical analysis imaginable. If each low is higher and each high is higher, they're probably going to try to buy some. They chart using either a simple ruler and a pencil with a very dull point or magic markers. They give it some room to work. But when you break big trend lines, they tend to get out. Keep it that simple. I've never met a great trader, a great investor who was complex. Oh, I think there's some merit to Elliott wave. Things do tend to go up at 1, 2, 3, 4, 5. Oh, 6, 7, 8, 9. Very confusing to the Elliott wave people, okay? But 10, you know? What do you do? I don't know. I keep waiting for 11, and if 9 had been a break, then 11 is probably going to be 1, and it's probably going to be 12. This will drive every Elliott waver out of his mind, okay? But it happens. The only elegant technical idea that I have put merit into is that markets do tend to correct between 50 and 62% of the last move. I tended to watch that. So on charts, I tend to construct an area on the chart. I call it the box. The area between when you've got something that's gone up parabolically and it starts to come down. Look at where the last low was. Look at where that parabolic high was. Draw a place on the charts. Give it some space between 50 and 62%. And you'll be surprised how many times the price will come down and job around in that area. Oh, it might not get quite down into it. Oh, it might get just a little bit below it. But it'll tend to go down into that area. And then if it's a good bull market, it'll start to pull back out and start to make new highs. That's as sophisticated, that's as esoteric as I'm going to become. Another good rule. Bear market corrections tend to be more violent than do bull market corrections. Why? I haven't the faintest idea. Are they? Yes. Be more careful in bear markets. Why? It is a bear market. Going to be a lot of us who are bearish. Going to be a lot of us who are short. Whether we respond to it properly or not, it's illogical, but when we're short, we tend to run for cover faster than when we're long. That's just human nature. So bear market corrections tend to be more violent than our bull market corrections. It's a good rule. Really important rule. There is never just one cockroach. Okay? This is an important rule of trading. There is never just one cockroach. When bad news comes out, more bad news is going to come out. It's just that simple. When Enron, I love the story of Enron. It's a great story. I'm still angry at people who complain about losing all their money in Enron, as if they were cheated. No, you weren't. Enron went from 80 to 0, and it traded at every single decimal point all the way down. It never gapped lower. There was never any announcement that didn't let you get out. You rode it all the way to 0. It's your fault. Most people never got that. They thought they were taken. They thought they were being hoodwinked. No, it moved against you. How come you weren't out? But once the bad news started to come out on Enron, there was never one cockroach. There was an endless supply of new and bearish news. Here in the current recession that we're going through, every bit of news is bad. Every cockroach, there's a new one. There wasn't one Madoff. Now there's Stanford. There will be more.